a really great week for the stock market and some really great stuff for some really great people. And the first thing that we need to talk about doesn't have too much to do about stocks, but it's something that has been swirling over the internet for quite some time, and we are going to tie it back in to the overall vibe of what we do here. It is finance related, so here is a chart of Spotify stock, okay? Spotify has been the platform of discussion lately, all right? A lot of stuff has been going on with Joe Rogan and a big controversy over at Spotify. So before we really dive into that for just a brief moment, for anyone who's interested, we're going to kind of explain the situation and what's gone on thus far, while also tying it into Spotify stock. Okay, Spotify stock is not doing too great as of late, right? It's more of a growth company. It's also been moving down along with the overall market over the past couple of months. So now this story is relevant, right? We're going to talk about Spotify stock as well as the whole controversy that's been going on with Joe Rogan, because I figure, the more people who know about it, the better, and the more people who get to have some time to think about it for themselves, the better of a situation we're going to be in. So good morning, everybody. First of all, good morning, Tommy, Boogeyman, Quaid, Squirrely B, JL, Sub-Zero, and Greg Taylor. Good morning, guys. And Boogeyman, you said you couldn't find me on Rumble. If you searched for me, well, I'll pull it up. I'm pretty sure if you go to the front page, you can just search Rob Almazy. And I do pop up for myself, at least. So I don't know. I don't know what's going on with that. Hopefully it will work in the future. I don't know. It might have just been a little glitch. But the Joe Rogan controversy, right? That's what we need to talk about. So for those of you who don't know, this is a pretty compelling controversy, right? A lot of people are talking about this, so much so that it's actually the fourth thing that you need to know this morning, according to CNBC, right? 5 things you need to know before the stock market opens on Monday. It is the fourth thing right here. Spotify CEO apologizes after clips show Joe Rogan using the N-word. We have the other story pulled up right here. But basically, for those of you who are unaware of what this whole controversy is, basically, people have been giving Joe Rogan some flack for a long time. They've been trying to censor him in a way, right? He's had on a lot of doctors. This originally started as him having on some doctors who said stuff about vaccines and about the pandemic, and people didn't like what they had to say. They wanted those episodes taken down. Some artists on Spotify began demanding that Spotify either take down Joe Rogan's episodes or that they would have their own music removed. And so far, Spotify has been siding with Joe Rogan. That's what they're continuing to do as of this story, right? The Spotify CEO apologizes to staff for the Joe Rogan controversy as episodes get removed. However, supports Joe Rogan at the same time, right? Decides not to remove him, decides not to censor him. After all, Spotify did pay about $100 million to Joe Rogan for the right to have him on their platform exclusively. So they probably don't want to let go of that investment, and it's a pretty good investment if you ask me, because most of what I do on Spotify at this point is probably listen to Joe Rogan. Maybe it's a 50-50 mix between Joe Rogan and music, because I do also use them for music, but a lot of it is Joe Rogan, okay? And I've actually started listening to other podcasts on Spotify because I've gone there to listen to Joe Rogan and have decided that it's a decent platform for podcasts. And the fact that the CEO is standing with Joe, and even though he has to posture and defend the company as a whole, right, against all of this negative stuff coming at them, I think it speaks a lot to the ethics of the CEO, the fact that he is unwilling to censor Joe, right, that he doesn't want to just bend to the will of people who want censorship. I think that's really important, so I'm happy to hear it. And unfortunately for Spotify, it hasn't quite saved their stock, right? But what can you expect? The stock market's been moving down since November for a lot of these growth stocks, and it's completely expected to see that, when there's a big controversy surrounding Spotify, they're probably not going to do incredibly well. But what's happened recently with the Joe Rogan controversy is, people were getting mad at him, and someone made a compilation of him in the past, years and years ago, using the N-word in his podcasts, and never, I don't think, in a way that was meant to be insulting, but he would use it in a sense to, explain what other people have said. And I haven't actually seen the video, but that's the gist of what I've read about it. And he has apologized for this, right? He released a video, and he said, "It looks effing horrible even to me." He said, "I know that to most people, there is no context where a white person is ever allowed to say that word, never mind publicly on a podcast. I agree with that now. I haven't said it in years." So you have it there. That's Joe Rogan's response. And the CEO said, the CEO of Spotify, said, and I want to make one point very clear. I do not believe that silencing Joe is the answer. We should have clear lines around content and take action when they are crossed, but canceling voices is a slippery slope. And instead of canceling Joe, Spotify said it will instead invest $100 million for the licensing, development, and marketing of music and audio content from historically marginalized groups. So it seems like a win-win situation, right? Joe gets to stay on the podcast, on the platform, and Spotify is going to invest some money, potentially in something that could become very profitable if people enjoy this kind of content. And these historically marginalized groups will get some additional investment coming into them. So it seems like a win-win-win from Spotify's perspective. And the only people who are really losing in this situation are people who really want censorship. So all in all, I'm relatively happy with that outcome, right? The fact that we've gotten to keep Joe on Spotify is very assuring. I think that it's worth mentioning that there were a lot of voices that helped out with this. And, it's not like everyone turned on Joe instantly. There were still a lot of people supporting him. We can pull up some on Twitter. Lex Friedman, a good friend of Joe's, said, I stand with Joe Rogan. It is not a coincidence that the attacks calling him racist come as pressure on Spotify to censor builds. Politicians and the media profit on division and outrage. They fuel the extremes that make us believe we're divided. We're not. We're in this together. And then he also said, he had a second tweet, and it said, the White House pressuring Spotify to censor Joe Rogan is un-American. We are better than this. So I have not heard too much of what the White House has said, but I think it was Jen Psaki, the press secretary for the White House, has talked about Joe Rogan and potentially tried to convince Spotify to get rid of him. We also have someone from the other side, right? Andrew Yang, not the most conservative figure, more of a fan of universal basic income, but still a really good guy, in my opinion, from what I've heard, from when I've heard him speak on the Joe Rogan Experience. He said, we should have a statute of limitations on statements. So essentially, once again, supporting Joe, saying that, Joe said this a long time ago. We shouldn't be canceling him for stuff that we said years ago. So thank you, Andrew Yang. I don't know if anyone else knows who he is, but I'm a fan of his, even though we might disagree on some things. I still think it's important to point out the positive examples, right? So, all in all, that was the Joe Rogan controversy. Just wanted to cover that for the first couple of minutes, and it is relevant, to what we're talking about here, right? We'll see how Spotify reacts to all of this. It seems like they are up as of Friday and not doing great over the weekend, right? The after hours and pre-market, they're down just a touch, but nothing insane, right? They're not going to crash the stock because they're refusing to remove Joe Rogan. In fact, I think that over the long term, this could be beneficial for their stock price. If Joe Rogan continues to bring people to the platform, and if people see it as a space that's safe, then maybe we'll see Spotify continuing to grow. Now, if they do end up canceling Joe, then there is one place that Joe Rogan might decide to go, and I think you guys know where it is. In fact, some of you might even be using it right now to watch this stream. It could be Rumble, right? If Spotify decides to cancel Joe Rogan, that could actually be one of the best things that's ever happened for Rumble. Rumble might actually really take off, and you can see that in the after hours and pre-market, it's actually up quite a bit. So we'll see what happens with this Joe Rogan controversy if more and more pressure just keeps getting piled on Spotify and they eventually succumb to it. Hopefully not, right? I hope that there's more and more places that we'll have out there that support free speech. But if Spotify ends up bending over to this, then maybe Rumble will be the beneficiary, right? Maybe they'll gain Joe Rogan. There are already a lot of really great voices on Rumble and a really great community there. We'll see if Joe Rogan decides to join up at Rumble, where he pretty much has a guarantee that his rights of free speech and whatnot and anti-censorship will be protected as long as he's not doing something illegal. So I'm potentially looking for that possibility. It looks like maybe some people are guessing that could be the case. It looks like Rumble's done pretty well. Obviously, they have a lot of reasons to do pretty well, right? They had record user growth in January, and they're a very fast-growing platform. A ton of new people coming onto it, both as content creators and content consumers. So I think that we're going to see good stuff for Rumble either way, but that is a potential situation that we could be looking at. If Joe Rogan ends up coming over, that could be very, very beneficial, bringing over a massive audience. And I know a ton of people would love to see it. So we'll see what happens. I think Spotify is going to do their best to guard Joe Rogan pretty well. I think they realize what a valuable asset he is. But it is possible that he will become Rumble's valuable asset instead of Spotify. So we'll see about that. That's not a guarantee. That's just a little speculation on my part. So we will start talking more about stocks in general now. We don't need to just make this whole thing about Joe Rogan. But I thought it was something that was relevant and something that was important to discuss because at the end of the day, if we can't talk about what we want and if people are just going to cancel us for stuff that we said years ago, that doesn't sound like a great place to be. And that doesn't sound like a great place to be a content creator especially, right? So I thought it was relevant for not just people watching the stream, but also for myself to bring to light this issue. Okay, so there are a couple of other things that we need to talk about. Not all of it the brightest and best news. Some of it, unfortunately, is a little scary. Some of it's a little negative. You know, the Russia-Ukraine situation. Nobody's happy to see what's going on there, right? Everybody is a little worried about the potential for war, and that has reached even the highest levels in France, right? France's president is flying out today to meet Putin in a risky bid to avert war. So France's Macron flies to meet Putin. And, you know, a lot of leaders have wanted to speak with Putin. We're going to see if France's president can do anything about it. I mean, anything that we could get to potentially de-escalate this situation would be much appreciated. Nobody wants a war between Russia and the West. That would be a horrible situation. It looks like Russia's been talking with China's president, President Xi, or whatever his title is. I don't know if it's president, but it would not be a good situation to see Russia and the Ukraine going at it and all of the Ukraine supporters going at it with Russia. Nobody would like that. That would certainly not have a good impact on the stock market, okay? When there is a big conflict like that, people don't, I mean, you think we have supply chain issues now. Talk about the type of supply chain issues we might have when there's a war going on and the extreme fear, psychological fear that will be put in people's minds if there is some kind of war going on. I mean, we would see a real crash in the stock market, I think, if we did happen to actually go to war with Russia. There are so many risks involved in war nowadays. There are nuclear weapons and all kinds of stuff. So we'll see what happens. I mean, nobody wants a big war. It looks like France's president doesn't want a big war either. So we're going to see what he can do. The French president did say it is indispensable to avoid a degradation of the situation before we build mechanisms and gestures of reciprocal trust with Russia. So we'll see. It looks like he's going to try to get Putin to back down and maybe make some concessions himself. Who knows what's going to happen? Today is the day of the meeting, so hopefully we'll get an update on what happened with it, and hopefully it's a good update. But there have been actually people who have been a little unhappy with not the way France is acting, but the way Germany is acting. People have urged Germany to wake up over the Ukraine-Russia crisis before it's too late. So they're doing this because Germany has refused to send military hardware to Ukraine, unlike other countries. Now, I believe they sent, or at least sent east, some troops. So maybe they sent over some troops, and I'm not sure exactly what it means by military hardware. Potentially that means stuff like tanks and planes and whatnot. But Germany has refused to send that over to Ukraine, unlike other countries. Some people are viewing this as Germany just taking it easy while there's a real big threat, and just letting other powers, right, the United States and France, do all the hard work while Germany just sits back. Some people are viewing it like that. And someone at CNBC said, I think it's someone at CNBC. Who is I don't know who it is. A Ukrainian ambassador. Okay, Ukrainian ambassador said, "We think that the world is becoming more dangerous, and Germany, as the biggest European country and the strongest economic power, cannot allow itself to stay neutral and to go on sleeping and enjoying a comfortable life." So people are saying that Germany needs to wake up. They need to stand by their allies. And we'll see if they actually do that, right? Germany is the biggest economic powerhouse in Europe. So it could be very useful to have them showing some strength against potential invasion of the Ukraine. It might dissuade Russia a little bit. We'll see what happens, though. I believe that Russia and Germany have some kind of trade deal based around energy and oil, so it might not be beneficial for either of those countries to go to war with each other. We'll see what happens with it, though. Hopefully, nothing too bad will happen to the overall stock market and to Russia and Germany, but it is a possibility. I don't know if it's a distinct possibility, but it is a real possibility, and there is some percentage chance that's not just a fraction, right? It's at least a 1% chance that something really bad happens there. 1 in 100, I would say, at least, if not more. And that is a scary thing to think about, that there's probably a more than 1% chance that we could go through a massive crash if we did end up seeing some kind of hot war between Russia and Ukraine and whatever countries end up supporting Ukraine. I know that nobody would like to see that. And something that I did want to discuss just very briefly is this new mug that I've gotten. So let me make sure the camera's looking at it. But we've got a Black Rifle Coffee Company mug. This was my uncle's at one point. It is now mine. So there we go. They have not just the Black Rifle Coffee logo on it. They've also got their little saying. I think you guys can see that, coffee or die. And I know a lot of people have had an issue with Black Rifle Coffee Company in the past. A lot of people have been upset with them for, as some people have said, kind of turning away from their roots and dissing their supporters. And it's an understandable issue to have with them. But I will say my uncle was a veteran, and he still supported them. So if it's good enough for them, it is good enough for me. And, I'm not actually drinking Black Rifle coffee out of this. I'm not drinking coffee at all. It's actually matcha tea. So I should probably be drinking coffee, but I just got the matcha yesterday. I was at the Asian market and wanted to try it out. Now, look at this. Sundial is actually moving up in a pretty good way, right? We're probably going to open the day green. We're up to 54 cents per share with Sundial, and we've seen a fairly steady recovery from them over the past 10 days, right? They've moved up pretty well. And this is actually coming on delisting day, right? Today, the 7th, is the day that Sundial should be getting their delisting letter, right? The NASDAQ should be sending them that letter. So what does that actually mean for Sundial? Well, we've got the delisting rules right here. For those of you who are interested in Sundial, Sundial is a cannabis company, and it's been trading under $1 for quite some time. So people are worried that this thing's going to get delisted. Now, what's going to happen over the next couple of days? What are we going to see with Sundial? So if a company fails to comply with the minimum requirements during the first grace period or any second grace period, NASDAQ will issue a delisting letter to the company. So that should technically be happening today, unless they've been granted a second grace period that they're going to disclose. Hopefully they will. But as with the deficiency notice, the company must notify the investing public of the delisting letter within 4 business days by filing an 8K with the SEC. So within 4 days, we should hear about what's happening with Sundial stock, and we should hear about it here, right? I looked for it already. There's nothing out that I can find. So the latest thing that we've got is from the 24th of January, and it's a 6K, not an 8K. So we haven't gotten anything from Sundial on this yet, but we will know about it within the next 4 days. So by the 11th, we should have something from Sundial. Either the delisting letter or an announcement that they've gotten a second grace period. The hope is that it will be the latter, right? That they'll get a second grace period of 180 days. It would make a lot of sense in this economic climate, I think, for the NASDAQ to grant that to them. But you never know what's going to happen, right? You never know what the NASDAQ is going to decide. Maybe they don't believe that Sundial can get to over $1, which I think is a little ridiculous, right? They've got that buyback in their pocket, and they probably have a lot of goodwill coming to them over the next couple of months, because we have gotten quite a few more talks about safe banking and legalization coming in the House and Senate. So we'll see what happens with that. But within the next 4 days, we should know what's going on with the Sundial delisting, right? They can appeal its delisting to the hearings panel, and that will indefinitely halt the process, right? This request effectively halts the delisting process until the panel renders a decision. So it could halt it for, if they just decide instantly, it could halt it just for a day, or it could halt it for many days, right? Until the panel makes their decision. We're going to see what happens with Sundial. It looks like we're seeing some good price action as of right now. We're currently moving up. I'm happy to see it, but there is risk with Sundial, right? You guys should not be investing money that you cannot afford to lose in any stock, in anything. You shouldn't be investing money that you can't afford to lose. If you have a definite need for cash in the future that you know of, you probably should not be investing that money. Not financial advice, but just my opinion, right? I think that you should probably play it safe. But if you have money that you're willing to play with, then you can start looking at investments. So there was something else that we had to talk about today. Not the most pressing issue, but it is something interesting, and you can actually see it here. It's something that I noticed over the weekend, and you can see it right here. So top trending stock, Peloton, up 27%. This is on news that Amazon might be considering buying them out. We'll pull up Peloton right here over the SPY. And this is on news that Amazon may be buying them out. It's just rumors as of right now. We don't have confirmation that Amazon is actually going to be doing this, but you can see that the rumors alone have been very beneficial for their stock price. Now, it's funny. I'm not the biggest fan of Peloton, right? If you look back over the past 2 years, you can see they did incredibly well during the pandemic. A lot of people wanted their workout equipment. For those of you who don't know, let me pull up Peloton's site. And I'm going to tell you my personal story of what I saw with Peloton just this weekend. So Peloton, basically, they sell these bikes and treadmills, and then once you buy them, you can subscribe, right? You have to subscribe, I think. Maybe you can still use them without a subscription, but you buy these things for a couple thousand, or at least more than $1,000, and then you can pay either $59 a month or $39 a month for access to these live classes, and that just play right on the screen that's on top of them. And boy, does that not seem like a good business. I mean, who wants that? I could understand it being very prevalent during the pandemic. I could understand a lot of people wanting that workout equipment and access to those live classes during the pandemic. But who is going to pay $40 to $60 a month? I mean, look at this. $40, $39, or $59 a month to have access to live classes. I mean, you could pull it up on YouTube. I have thought about starting a fitness thing on YouTube just because I think it would be fun to record. But boy, who's going to pay for that? Who's going to pay that much for it? It does not make too much sense. But I'm not the biggest fan of them. Something that I noticed this weekend, I was on a plane. I was actually going to Florida for a day. And on the plane, I noticed that, they have those little screens in front of you. The advertisement on that plane was from Peloton. And it was a meditation and relaxation program that you were supposed to be able to do on the plane. And it just seemed a little ridiculous, right? I assumed that it was something you have to pay for. And it seemed a little ridiculous that you would have to pay money to get this meditation and relaxation thing. I mean, I had, Bluetooth earbuds in, and I could have downloaded any meditation relaxation thing that I wanted, or pre-downloaded it if there was no Wi-Fi on the plane, which I believe there was. And it was sponsored by Peloton, that whole meditation relaxation thing on the plane right in front of me. So they're trying, guys. They are trying, but I just don't know if they've got the best business model, right? If too many people are going to be willing to pay for this stuff. When times are good, when people are flush with cash, then yeah, sure, why not throw a couple bucks at Peloton? But it just seems like a kind of random and somewhat gimmicky business model that doesn't really provide too much additional value for what you're paying for. So that's just my opinion on Peloton. I'm probably not going to be buying them anytime soon, but it looks like Amazon might disagree. If Amazon decides to buy them out, then maybe we'll see really good stuff from Peloton, and this pump will be justified, and we could see a big buyout of them. That's what people are speculating on right now. We'll see what happens during this earnings call. I don't believe their earnings calls have been great in the past. They've been losing money, it looks like, and they actually moved down big their last earnings call. So we'll see what happens with Peloton. It's an interesting company. It, at one point, provided a lot of opportunity for people to about 10x their money on the ride up from the lows to the highs. But I just don't know about them looking forward. I mean, unless we re-enter the lockdowns and get back into pandemic mode, I just don't see them becoming super relevant. Now, once again, we could see Amazon buy them out. They could provide a nice short-term profit for people, and maybe Amazon will figure out a marketing technique that they can really use effectively with them, and maybe that'll be a good thing. We'll see. But overall, I'm not the most bullish on Peloton stock. That's just my opinion, though, just because I can't really wrap my head around why their business would ever do incredibly well unless we were in the lockdown, which it makes a lot of sense then. Obviously, you can see their price appreciated pretty dramatically. So we'll see what happens with Peloton. They are a top trender right now, and if you're a trader, then they could be a potential volatile play that you could play some options on and do something like that. But I'm going to stay away from Peloton myself. That's just my opinion. So the next thing that we had on the radar, it was not from StockTwits. It was actually from apewisdom.io. Meta, Facebook, is quite popular on Reddit at the moment. This is coming after their massive price drop. So we've talked about this a bit. This was a pretty dramatic drop in price. It was actually, I believe, the largest single day decrease in value in an equity ever. So pretty dramatic stuff. $260 billion were lost from Facebook's market cap in a single day when they crashed on this earnings call. And if you look at the yearly chart, you can see just how low that's brought them. It's brought them down to 52-week lows. And a lot of people are excited to see this, right? A lot of people are mad at Facebook because they've not been the, speaking of censorship, they've maybe been a little bit more on the pro-censorship side in a lot of people's minds. They don't like Facebook very much. They don't like Mark Zuckerberg, who is the majority shareholder of Facebook, and boy, did his wealth take a massive hit. We'll take a peek at that, actually. World's richest people right here. We've got it coming up. And Mark took a massive hit to his net worth. The second largest decrease in net worth in a single day by anybody. The first was Elon Musk. Way back a couple of months ago when he announced selling 10% of Tesla stock, he took a massive hit to his net worth. But Mark took the second largest hit, $26 billion, I believe, or maybe $29 billion. Something really dramatic. He's down below $100 billion. So I'm sure it's scaring him to see that, about 30% of his net worth can evaporate in a matter of less than 24 hours. He probably was not very enthused to see that. But what matters to him more so, most likely, is retaining majority ownership interest in Facebook so he can make the decisions and take the company in the direction that he wants to take it in. Now, fortunately for Facebook, it seems like he's going to take it away from the social media business and into the metaverse business, right? That's why he renamed Facebook to Meta, and why he's been pushing these Quest headsets so much, right? These are the virtual reality headsets. I actually have one of these. My cousin has two of them, and they're pretty cool, right? I don't actually use them that often because they aren't the most useful. There are some fun games you can play. I think that in the future they're going to be a lot cooler, but we're still in the very early stages of the metaverse and having these virtual reality headsets. And this one, it was only $300, so it's not like it's the highest quality. It still uses remotes instead of hand tracking, which some of them are starting to use nowadays. You can actually have a little sensor that looks at what your hands are doing and move your hands very finely in these virtual reality settings. This one still just uses remotes, and understandably so, right? For a price of $299, you can't expect that much from a virtual reality headset, but you actually get a really good deal, in my opinion, with this one, right? $300 for this. I thought it was quite well worth it because I typically thought of VR as having to be, $1,000, $700 maybe. And then on top of that, I figured, okay, and you'd have to set up all kinds of cameras across the room to look at what you're doing. But this one, you just wear the headset and have the remotes in your hand, and you could use it in the park, you could use it anywhere. So it's crazy to think how far we've come over the past couple of years. And what's crazier to think is how far we'll probably go over the next couple of years. And I could see Facebook doing pretty good if they really pivot into that direction and start using those headsets effectively and marketing them. And if they really make those headsets accessible to pretty much everyone, it could become, the Apple of the metaverse is what I'm thinking it might do. But in the meantime, it's a pretty risky play, right? They are decreasing dramatically. We saw user growth fall for the first time for Facebook, and it's scary stuff to see. So they're definitely a risky play. They're not the sure thing that people used to think they were. They have tough times ahead of them, most likely. We're going to see what they can do with this metaverse thing. Maybe they can do well with it. Maybe they can't. Maybe they end up falling and just becoming one of those old companies that you hear about, one of the old railroad companies of the past that aren't too relevant anymore. We'll see what happens with Facebook, but you can tell that they were not the sure thing that people thought they were when they fell 26% in a day. And, the largest drop in history. So scary to see that you can wipe off that much value from a stock in a single day. Well, not even in a single day. In just a couple of minutes, you actually wipe this out. It was in about 30 minutes that this thing got wiped out. $260 billion worth of value. So we will pull up the overall market. It looks like we are about to get the opening bell. And hopefully we're going to see some green today. Hopefully Sundial will be green. I know people would like to see that, especially if we got closer to that dollar level that a lot of people are hoping to get us to. But we'll see. We'll see what happens. DWAC has been doing incredibly well. DWAC, if anyone's going to benefit from the fall of Facebook, it is DWAC. Twitter would probably, benefit a little bit. All the social media companies, if Facebook really starts going down the gutter, all the social media companies will benefit, but probably DWAC more so than Twitter, right? A lot of people have already seen Twitter. Some people, if their old favorite social media platform, Facebook, goes away, might be looking for something a little bit newer. And especially in this world of censorship that we're living in, where people have to really worry about getting canceled and whatnot, Joe Rogan even, people might want to turn to a platform that's less likely to cancel them. So we'll see what happens with DWAC and with Rumble as well. Michael Chin said, it seems like a lot of old farts like myself use Facebook. I think that's the case. I think it is mostly older people. I have a Facebook, but I haven't logged into it in quite a long time. So I think that it is mostly older people using Facebook. And that's potentially why we saw user growth slow, because they might have just reached most of the older people who were willing to use it or who had any interest. And if new people aren't being born wanting to use Facebook, then they're looking at a tough situation where they're probably going to see some declines. And that's unfortunate. Facebook, unfortunately, is just an oldish platform. It's one of the older ones out there, and I think it's kind of run its course. So I don't know if there's too much they could do to really revitalize it and get a bunch of young people on there. Pretty much, you log on to Facebook if you're in my generation and you see your parents on Facebook. It's not your friends at high school or college or wherever you're going. So I think people have kind of turned away from Facebook. They're more likely to use something like Instagram, even Twitter, I guess. I was never a big fan of Twitter, but some people like it. So Max Pierce says, is MySpace going to make a comeback? Probably not. Probably not. I'm guessing we won't see good stuff from MySpace. But look at this. DWAC and CFEI, both up about 6%. Look at this. I'll pull up CFEI right over Sundial very temporarily. And look at that. DWAC and CFEI both up 6+% on the day. DWAC is about to struggle with the $90 level. Looks like they played with it a little bit just a minute ago. We're going to see if they can get up there. Hopefully they can. Facebook's not doing too hot, but they're not red on the day at least. We'll pull up Sundial down here. Looks like Sundial's taken a little bit of a beating for the first couple of bars of the day. The market hasn't quite decided what it's up to yet. But there was something that we needed to talk about, and it's actually something that's happening this week, right? We have a continuation of the inflation report coming out. So at 8:30 on Thursday, we are looking at core CPI month over month for January, and that's going to indicate to us which direction is inflation headed. Are we heading up? Are we heading down? Are we going to see prices getting higher? Are you going to pay more at the gas pump? Are you going to pay more at the grocery store? And a lot of people are worried about this. Now, this is going to be a big indicator to the Fed as well, right? We have the following day, the Fed monetary policy report coming out. So on Friday, the Fed monetary policy report is coming out. We're going to see what happens with it. Hopefully we'll see good stuff. But a lot of people will be watching this CPI report. If we see higher than expected inflation, boy, oh boy, could that be bad for the stock market, because that's going to indicate to Powell that inflation is worse than he thought, that he needs to do more rate hikes. And as illogical as it seems, maybe we get rates raised a little bit, but that is going to have a very negative impact, most likely on the stock market. It seems to be that most people are extremely fearful about rate hikes, even though Powell most likely isn't going to do anything insane with the rate hikes. It's not like he's going to raise them 5%. We're talking what Powell might do. Maybe he'll raise them by fractions of a percentage point at a time. And that really, in my opinion, shouldn't scare people too much. But it has scared people quite a bit, and understandably so. There's debt out there. I understand that people would have to pay more interest on their debt. It could cause some slowdowns in the economy. But if you look, I'll pull up the typical inflation that we've been paying, or the typical interest that we've been paying. So, I'll pull this up. The Fed funds effective rate. You can see that we had a pretty high interest rate for most of our history. If you look back all the way to 1955, we had a pretty high interest rate. It's only recently, really since the beginning of 2009, that we had these near zero interest rates. Then we tried raising them over the course of 2017, 2018, and more recently have had to put them back down to zero again. So it's only recently, really, only the past decade or two, that we've had these incredibly low interest rates. And the U.S. economy certainly saw quite a bit of growth in the past. It's not like we just started growing in the past 20 years. We've had really good years in the stock market, even when we had relatively high interest rates. And the fact that maybe the Fed is going to raise them to 1 or 2% really should not be horrifying people as much as it is, at least in my opinion. But that's not going to stop people from selling their stocks very temporarily, most likely, right? If we do see big depreciation in stock price, I don't think it's going to lead to a massive recession. I think that we would probably recover fairly quickly. Maybe it'll really tank stocks for a year if the Fed raises interest rates and people are worried about that kind of thing. But I just can't see stocks tanking over the long term because the rates are high. Because you've seen we've had great years it's not like we were in a constant depression until 2010 when we had interest rates at zero. We were doing pretty good in the past, and I think we'll continue to grow quite a bit, even if we do have these higher than wanted interest rates. Now, obviously, the Fed has been giving us a bit of enhanced growth over the past couple of years with these low interest rates. They cut them to zero to combat the pandemic, and we've been doing pretty good off of that. So understandably, we're going to see a little bit of pain, right? We've already seen a bit of pain. We've already moved down in the markets. How much of a percentage basis have we moved down? We've moved down about 12%. Yeah, 12.5% from the highs to the lows because of these interest rate fears. And in my opinion, that's not a real reason to be super fearful. At least how I'm seeing it. That's not a reason why I'm going to be super fearful in the markets. So the inflation report, while it could have a short-term impact on stock prices, I'm not the most worried that we're going to see a market crash if this CPI data comes out a little higher than expected. But you never know. You never know. And look at this. DWAC blasting through $90. We'll see if we can hold above that. Maybe make our way towards 100. We got to highs of $92.86. So DWAC doing incredibly well. CFBI still playing around 6% gain on the day. We're going to see if we can get that up a little bit also. Sundial bounced off 53 cents as support. Happy to see it. The markets look like they might be bouncing a little bit. Maybe we'll see some green in there also. That would be the hope. It is looking like we'll see a green day in the stock market. Meaning we're looking at this stuff and talk about gains. Look at PHUN. A lot of people have bought into this one as a DWAC play, and it's actually beating out DWAC today. It's up 18%, and it's okay. Look at this. Funware in political partnership with Campaign Nucleus. Look at that. So PHUN said it entered into a strategic political partnership with Campaign Nucleus to improve its smart advocacy solution on mobile to further extend its capabilities in support of tech-enabled politics. Very cool stuff. So they are up almost 20% on the day, and they're also a DWAC play. Now, I will say, as I do in pretty much every video that I mention PHUN, it's not confirmed that they're going to be working with DWAC and Trump, right? We don't know for sure if PHUN is actually going to be working with them. But they have benefited around the same time as DWAC. You can see on the chart, it's a very similar chart, right? They pumped up massively at the same times and kind of followed the same pattern, though recently they've not been doing as well as DWAC. DWAC has actually done incredibly well. PHUN, not so much, right? They haven't done too well lately. But you never know. You never know. They could announce that the rumors aren't just rumors. There's something real and start trending more strongly with DWAC, but we've yet to see that happen. Now, CFBI, Rumble stock, making highs on the day, up about 8%. I bet a lot of people watching on Rumble are happy to see it. If you're watching on Rumble, my guess is that you're probably invested in Rumble as well. So it would not surprise me to see a lot of people very happy that we're seeing quite a bit of green in CFBI as well as DWAC. Hopefully. Rich M says, go DWAC. Yeah, I think DWAC, at this point, it would be tough to see a bad day for DWAC. We'd really have to move down quite dramatically, down below $84 to see a red day on DWAC. I think the chances of that are relatively low. If the market starts tanking, then maybe something bad could happen. But overall, the markets are looking pretty green, right? The S&P is up. The Russell's is actually up the most of the S&P, the QQQ, which tracks more tech-heavy stocks, and then the Russell's. And this is exactly what we want to see, right? We want to see the smaller market cap stocks coming back because to me, that's going to indicate that we've potentially hit the bottom when these riskier stocks start seeing money flowing into them. When the Russell starts making new highs, then that's going to indicate that we've probably caught the bottom of this whole downturn and that maybe the Russell's has the potential to outperform the S&P. Because if you look at the Russell's right here on the left and the S&P right here on the right, the S&P has just been rising over the course of 2021, and the Russell's is actually basically at break even for 2021. It's like 2021 didn't happen. They basically started the year very close to 200, around 197, and they're at 199 right now. So maybe the Russell's will outperform the S&P this year as the smaller market cap stocks start to take off. That's my hope. I know that those are the stocks that a lot of us may be invested in, And those are the stocks that have been seeing quite a bit of pain lately. So it would make sense if those stocks that are at this time still very heavily shorted actually started performing quite well. And, when people are shorting these stocks, there's a lot of built up pressure that needs to be released at some point, right? They have to eventually cover their shorts if they want to take profits. Unless they think the company is going bankrupt, they probably don't want to be perpetually shorting it because you are paying borrowers' fees. And so there's only so much profit you can actually collect on a shorted stock. You can't actually take that to an infinite amount of profit like you can when you're long on a stock. When you buy a stock, you might pay $1 for it and it could go to $1 million per share. Obviously, that's very theoretical, probably wouldn't happen. But when you short a stock, maybe you short it at $1, it can only go down to 0. And you're only going to be able to capture a 100% gain on that trade. So there's a limited upside when you're shorting a stock and an unlimited upside when you're long on a stock, which is why I tend to prefer being long, because it just opens up the possible situation for you to make infinite returns on your investment, right? If the company really does well and you're in it for the long term, you could make infinite returns as long as you never sell it. If it just keeps going up and up, if it starts paying out dividends, you can still collect capital from it without actually having to sell your initial investment. And I'm incredibly bullish on the future. I think that a lot of tech companies are going to do well. Growth companies, I think, are going to succeed. And a lot of people are doom and gloom. They think that we're going to have a reckoning. It's very possible that we will. But I will point out, depending on what type of reckoning you're thinking, maybe you're worried about inflation. We'll probably see a little bit of pain from that. We've already seen a little bit of pain from that. We'll probably have to deal with at some point the national debt, which has just reached 30 trillion. And I'll pull this national debt clock up and you guys can see exactly what the national debt that we're looking at is. It is at $30 trillion, $16 billion, $552 million. So over the weekend, we added another $16 billion onto the national debt. I mean, it would be nice if they just handed that out to people. I would love 16 billion or even a million. If they just wanted to hand that out to 160,000 people, I think they could do that for. That would be very nice if they just decided to hand that out. I would gladly accept it. So, that would be nice, but we'll see what they end up spending it on. It really makes you wonder where all this money is going. Who's getting it? What are they borrowing it for? Where are they spending it? I'm sure we could look in depth at that, but it's probably too dark of a path to go down. You probably don't want to know where it's all being spent. You might find some answers that you don't want to find, and that people don't want you to find. So we're not going to look into it. Maybe we will at some point, but for now, we'll watch the stocks go up. That's what I'm content to do. I think that finally we're starting to see the potential that 2022 has. Now, it was a really rough January. Don't get me wrong. A ton of people lost a ton of money this January as stocks moved down. In fact, if we pull up the yearly highs, we pretty much started January. The second day of trading in January, we were at all-time highs in the S&P, and less than a month later, we had fallen about 10% in the stock market overall. And trust me, a lot of stocks fell a lot more than 10% in the month of January. We saw 10% drops per day on some stocks. Some stocks were incredibly beaten down. And it's really providing the kind of situation where I think we could see some significant upside, especially now that these stocks have been beaten down after being beaten down for months and months and months on end. A lot of these smaller market cap stocks have some real potential. So I am looking forward to seeing what the rest of 2022 has to offer, when hopefully we'll be a little bit more bullish. A lot of people's fears have hopefully subsided. We're maybe not as worried as we once were about these rate hikes and inflation in the Fed. We're seeing the markets actually be green today, despite the fact that CPI is coming out later this week. So hopefully we're going to see some more gains over the course of the week. We'll see. It's not a guarantee, but at least as of right now, pretty much every stock that we've got on watch, except for Robinhood and Facebook, are green. So we've got all of these stocks on watch. They're all green. It's really good to see that the markets are finally starting to make a little bit more sense, right? They're finally starting to come back to where they were about a year ago, when they were just perpetually rising, which I think everybody wants, right? Everybody wants the markets to do well. Everybody wants these stocks to continue performing adequately and not be as shaky, to not be such losers, right? They don't want these stocks sinking down. When people get into the markets for the first time and they put in maybe it's a new time investor, a first time investor, They put in $1,000 and they buy up some companies, especially if they're buying up companies like Facebook that are large market cap and PayPal, and then they watch those companies tank 26% in a day, or Netflix even. That's going to dissuade new investors, and it's a really not a good situation because you're basically compounding the losses, right? Originally, if you were just in a kind of normal market where stocks are slowly eking up as they improve their underlying businesses, then a new investor comes in, they put in $1,000, and a month or two later, it's up 3%, and they've made $30 off of that. And they look at it and they say, "Hey, I made $30 on my 1,000. I'm going to put some more money in," and that continues to raise the prices of stocks, and it's basically a cycle, right? As new investors are influenced to get into the markets by seeing their previous gains grow, that actually helps out stock prices in the future. And it's the same thing when you see stock prices moving down. New investors, people who've just gotten invested or people who invested over the past couple of months might see, hey, I just lost all of my gains and more, right? I'm down on money. If they put in $1,000 in November, then in January they're looking at it and it's maybe $800, $900, and they're pissed that they lost 200. They decide to sell, take it out, and then they're not investing in the future, right? Then they decide, the stock market's a scam. It's too risky for me. I'm not going to put my money in there. And they end up missing out on, obviously, potential future compound interest that they could be getting, but they also don't help out the stock market in general because the stock market thrives the more people who enter it, the more liquidity there is, the more people getting in, putting their money in, and the more people who have constant income sources who are then going to buy the dip on stocks when they move down. That's what protects the downside when people are willing to buy the dip. When some people get fearful, we need some buyers to step in and protect the downside. And a lot of these smaller market cap stocks have not had that over the past while, right? There's not been as much cash available for them. People spent their stimulus money and then kind of got crushed, right? They might have thrown it all in the market and not had very stable income sources. And then these smaller market cap stocks would just get crushed and there was no money to buy the dip with, right? You'd see in the YouTube comment section when people are talking about these stocks, people in the comments would say, well, I kept buying the dip on it, but now I don't have any money left to buy the dip. And that's really, a tale as old as time. We've seen it again and again as you get into these really euphoric periods, which we saw at the beginning of January. We'll pull up some of these stocks. I believe GameStop. Yeah, we saw GameStop run up. We saw AMC run up. Sundial ran up. We'll pull up the normal stocks in a second, but we saw a lot of these stocks during the beginning of January and over the course of 2021 doing incredibly well. People were throwing all their money in, expecting these to go, even higher to the moon. And then when they went down, maybe they bought the first dip a little bit. You saw a little rebound eventually, but then that was all the money they had. And you were unable to see further price growth because they bought the dip. Some people continued to sell out. And the initial investors who might have been willing to buy the dip even more, they were out of cash, right? They'd spent all that stimulus money. And, it's not just stimulus money. Some people had savings. But to be fair, we were in a pandemic and you never knew what was going to happen. We'd seen lockdowns before. And it was possible that we were going to see them again. So you wanted to have some savings. People were cashless at a certain point. So we did end up seeing a lot of these stock prices fall over the past couple of months. We're going to see if they've fallen too much. My theory is that they have fallen too much. I think that we're probably going to see some appreciation. Maybe not as much in the purely meme stocks. Maybe we'll see more appreciation in stuff that has some fundamental basis behind it. Smile Direct Club could be a good one. That's one that I've been buying up around the $2 level. And we'll see what happens with these smaller market caps that have the potential to become profitable sometime soon. I know that's a big deal for a lot of companies. But we will actually pull up CFVI again. It looks like I just caught it out of the corner of my eye. It looks like they're up massively, up 11% on the day. Boy, am I glad that I bought into them just recently, actually, or bought more of them, I should say, just recently. They are doing pretty darn good. I think people are realizing the potential that Rumble has, and it is fairly significant potential, right? They have been growing rather rapidly for a fairly long time, and I think that's going to continue. I think that we're looking at it right now. I mean, we got a decent amount of viewers on the Rumble stream, and I think that we'll continue to see that grow. So I'm happy to see it. And Zach Taylor says average daily DWAC volume is 6.5 million. Yeah, and we've already got 3 million volume on it today, so impressive stuff. DWAC could be on the rise. I mean, it's up 8%, so not surprising. CFVI is now up 12.5%. Really impressive. And, these are examples of the smaller market cap stocks that, granted, both of these recently became publicly tradable as SPACs relatively recently, but that I would have imagined would have been getting crushed over the past couple of months if we were in a bad economic environment. And more recently, they've actually started performing pretty well. DWAC especially has been doing well since January. It's been doing incredibly well. So maybe DWAC would have been immune, but it's the kind of companies that have good fundamentals behind them, good growth. Like I'm thinking more so CFVI, that's maybe more fundamentally driven at the moment. We've yet to really see DWAC launch, True Social or anything like that. But CFVI, Rumble is out there, right? And people can actually see the growth. They can see the revenue being taken in. And they know that it's a good growth stock. They might not be profitable at the moment, but it's certainly one that has potential. Look at this thing, up 14% at the highs right there. CFVI doing incredibly well. I'm very bullish on these stocks, I've got to admit. I'm glad that I got into them when I did. It looks like we might be ready for takeoff with this. I mean, if we get above 1548, I don't know if that's quite the highest. I think, we got to 16.19 at one point. There we go. So $16.19 is the all-time high for CFVI. We'll see if this can take us up into the stratosphere. My hope is that it can. The warrants are probably doing pretty good. The warrants are up 17%, up to $4.48, $4.50, up 18%. Yeah, the warrants are really going to benefit from this because I think if you were buying them yesterday, then it was a break-even price of about $15. So they're about to start getting some real value. Well, they've already got some intrinsic value in them since the purchase price is $11.50 per warrant. So they've already got some intrinsic value, and now we're just multiplying it. Anyone who was buying this, let's see how long ago. Yeah, I guess you couldn't get it for much cheaper than $2.50. I guess people realized the potential volatility that we could see with CFEI and the good stuff that we could see. So you never got the chance to get the warrants for too cheap unless you were buying it pre-announcement, I believe, that it was going to take Rumble public, unfortunately. But look at that. The warrants are up about 20%. Rumble's up about 15.5%. CFVI is doing incredibly well on the day. We're looking at all good stuff. There's very few red stocks out there. One of the red stocks, and it's unfortunate, is SBEA. And I'll pull this up. SBEA, Silverbox Engaged Merger Core. This is the one that's going to be taking, I believe it's going to be taking Black Rifle Coffee Company public. And it looks like there's been some news about it lately that I haven't been keeping up with, so I'll look into that. Yeah, expected to be approved by stockholders. Good. So they're probably going to be taking Black Rifle Coffee Company public, but it looks like they had quite a bit of volatility over the past couple days. I haven't been keeping up with them as closely as I should have been, but we'll see what happens with SBEA. Once again, for those of you who are unaware, I am drinking out of this Black Rifle coffee mug. And Slim Daddy Bim says cryptos are looking really bullish. That's right, we have not looked at the cryptos yet, so I will pull that up. Let's see what cryptos are doing. I haven't actually looked at them myself yet today, but they're up, and geez, Bitcoin is up way above 40,000 now, up to 43,000, up 4% on the day over the past 24 hours. Bitcoin's just been on the rise. Looks like, on the 4th, we just saw a massive pump on Bitcoin, and it looks like they're continuing to rise. Now, cryptos are something that I've been looking into more recently and trying to wrap my head around a little bit better than I have in the past. And I am starting to see a little bit of why people are really bullish on these cryptos. I'm going to continue looking into them, but I will probably be, at some point in the next couple of weeks, discussing some more of my thoughts on cryptos and NFTs and the value that they might have and some of the potential uses and the more so intrinsic value of them. Not necessarily intrinsic value, but as close to intrinsic value as you could imagine getting with a crypto. I'm going to be discussing some of my thoughts on it. So they are an area that I've not been too fully invested in. I've put some money in Bitcoin, put some in Ethereum. I've got some BNB, I've got some Dogecoin, Shiba Inu even. But I do want to delve a little bit deeper into these cryptos because they do represent a real possibility for the future, right? If we really start moving our financial system over to decentralized stuff, then these cryptos will probably be fairly important. And especially if they can garner as much support in the future as they have in the past, if more and more people keep coming into them, then they really could appreciate in value quite a bit. We could be just near the beginning of what these things could do. So I am going to be looking more into them. I'm not too heavy in cryptos at the moment, but it is something that I've been interested in getting into. All right, so yeah, crypto's looking pretty good. Kitchener does not like Black Rifle, and I don't know. Maybe I don't know. I feel like I've heard the speakers or the owners of the company talk on Joe Rogan. They seem to be good people, but who knows? I mean, maybe there's something people know that I don't. But I certainly like Black Rifle, and I think that SBEA, once it actually becomes Black Rifle Coffee Company, I think the stock could do decently well. Now, I don't know what has happened with them in the past. I think there was something about some court case that people were not a big fan of the statements they made regarding it, but we'll see what happens with Black Rifle Coffee Company. I still think they make good coffee, and I still like the company, right? I think they still do a lot of good stuff for veterans. We'll see. I know some people don't like. Yeah, ignorance is bliss, and it certainly is. It certainly is. I'll listen to them again. If they ever get back on Joe Rogan, I'd be happy to listen to them. I think they did one actually fairly recently. I might have listened to around the time when they started going public, but I don't think they talked about the stock too much. But not too many people who listen to Joe Rogan are listening to it for stock stuff. Yeah, NJ doesn't like Black Rifle. Yeah, that's what I'm hearing. I hear a lot of people don't like it, but I haven't quite wrapped my head around why. I haven't looked too deeply into the Black Rifle controversy. I just heard that there was one, but I'd rather drink Black Rifle than Starbucks. So it depends. Maybe I'm just choosing the lesser of two evils, but if I had to choose one, it would be Black Rifle over Starbucks. So I think they'd be more so aligned with what I'm trying to support than a big company like that. But to each their own. Everybody has to make their own choice about what companies to support. Maybe I just don't know enough about them, because it certainly seems like there are quite a few people who are not big fans of Black Rifle, but once again, haven't heard enough about it to really make up my mind about what I think of them. As so far, all that I've heard is good stuff, so I've yet to really dive into that, but we'll see. Maybe I'll look into it more. Most likely not. They're a small enough company that I'm not too worried about. Not too worried about it. InfoWars Coffee, Kitchener Leslie says. Interesting. I haven't heard of InfoWars Coffee. I know that there's Bankroll Coffee from Graham Steff, and that's one that I'm looking for. So FSA asks, did Sundial get the extension? So we've not heard anything from Sundial yet. We're waiting for an 8K to come out from them. That should happen. The rules say, we can pull it right here, at some point in the next 4 days, they have to release a letter either revealing that they've gotten the delisting letter. They have to have, so 4 business days they've got. So by the 11th, we should have something coming out by them from the SEC, right? They should be posting an 8K on this website, sec.gov, and we should hear about them then. So within the next 4 days, they'll be letting us know what went on. Maybe they got the second grace period. Maybe they got the delisting letter and they're going to appeal it. We will see what they say. We'll see what they say. So there is some risk, but it looks like Sundial, at the moment at least, is it's a little green, right? They're holding about 53 cents. They're up rather than being down on the day. So hopefully they're going to continue that. My hope is that they don't move down below 53 cents, that they continue actually maybe bounce off of that, and we start to see highs of the day. We'll see. Slim Daddy Bim says, as a veteran and defense contractor, I can say they get a lot of support from us. Yeah, and Travis Brusso says they send a bag of coffee to deployed units overseas for a bag sold. Yeah, I mean, that's what I've heard, right? I've only heard good stuff about them. I like them, but I've heard a lot of people for some reason do not. And, I haven't wrapped my head around why. I haven't heard of why, but, some people seem to not be too big of a fan. I'm still a fan. Once again, I'm drinking out of the mug right here. So we'll see. If I'm probably not going to look into the hate on them, right? But we'll see what happens. It looks like Sundial just got a massive green wick on this bar. Crazy stuff. A lot of buyers might be about to step in right now. We'll see what happens with it. Niner says, a lot of the funding that is supposedly benefiting veterans has been donated to BLM, Antifa, and the Dems. Black Rifles, thumb down, NJ says. Wow. Well, We'll see. Well, certainly. I mean, once they're publicly traded, we'll definitely see more financial reports, and they'll have to disclose a little bit more than they have been in the past. So we'll see about where their money's headed. But it is, guys, 10 o'clock. So that was the stream for today. I think it was a very bullish stream. A lot of these companies are actually making pretty significant comebacks. I mean, we're looking at PHUN up 20%, CFVI up 12%, DWAC up 11%. So a lot of companies doing very well. I'm happy to see it. And we will be back tomorrow, hopefully, to continue this rally. My hope is this continues throughout the rest of the day, and we continue to see a lot of green in the coming weeks and months on a lot of these stocks. And other than that, guys, remember, we do these every morning at 9. Feel free to join us every morning at 9, whether you're on YouTube, Rumble, wherever you watch your streams. If you want to get up with us in the morning, watch the markets for a little bit, hear about what's going on in the world, feel free to do it, because that's what we're here to do. So other than that, guys, have a great rest of your day. See you tomorrow at 9. Bye. And NJ, thank you very much. Thank you for the super chat. Well, the perfect way to end the stream. Thank you, man. All right, see you guys in the next